All right. So now that we finished our last previous transaction, right? We sold our furniture. We deposited the money into our bank account. So now we are moving on to the next transaction where we end up um, paying rent to landlord's properties. Okay. Here's the contract number 12365. So here it is, right? This is what we are renting out from landlord's property, right? We're renting out the address right here, the South Decatur Road, which is 2,500 square feet. Again, the amount is $6,000, right? Because we're gonna make a payment, right? Most landlords, right? They usually require at least a couple months advance payments, or they require a deposit or a they require a lot of things. So in this case, let's take a look at what we got from this landlord. Okay. So they said for us to stay there, we need to pay 4 months worth of rent. Okay, in grand total from June 5th to September 30th, right? And it's a $1,500 per month. Okay, so it gave us a total of $6,000. And then, of course, we also had to pay a rent deposit of 1 month's rent, which is $1,500. So in this case, we paid a grand total of $7,500. And we wrote our very first check, number 1501. Okay, so a lot of things are going on right now. So we need to acknowledge that we paid for rent. Okay? Now, in this case, we bought 4 months worth of rent, right? And we had to pay 1 month's worth of rent for a deposit. So let's take a look at my chart of accounts, okay? And let's determine what has happened in this transaction. Okay? First thing is, how did we pay for this transaction? How do we pay for this transaction?
By check.
We wrote a check. So that means we need to use our checking account. Okay? What else did we buy? What did we buy with this transaction? Why are we paying landlords' properties?
We're paying the rent.
Okay, so let's take a look. Do I have a rent?
Yes.
Okay, where?
And your expense.
So you have rent expense, right? $62,000. Now, let's take a look at this. How many months of rent did I actually buy? So Norman, how many did you say? You said 1?
3 months.
And Tommy, you say 3 months.
Right.
Can you buy? Okay, so in this case, all right. So
5.
okay, so Norman says 5 months. Now for rent expense, right? Rent expense can only deem to us for the current counting period. So that means if I'm going to make it an expense, it can only be for the current month. Can I record all 5 months of rent through a rent expense? Am I really renting?
No. No, how come
No,
though?
okay, you would withhold the deposit.
Okay, so let's take a look. Right? So, um, okay, so you said it's not 5 months, it's 4 months because you have to withhold the deposit, right? Okay.
Hmm.
So then what happens to the 4 months? Can you expense 4 months? Can you use 4 months for the current accounting period? So in this case, my current accounting period is for the month of June because I started in June, right?
Right.
Can I expense 4 months?
No, you will only have to. You have to. It has to be for that current month.
Correct. So that means I can only expense it for the month of June. So
Hmm.
that means I can only utilize 1 month because I'm currently in the month of June, so I can only use for the month of June. So then what happens to those other 3 months? You paid for them, didn't you?
Yes.
So what do we call that?
Debit?
It is a debit, but what do you call that? What do you call when you pay some
Prepayment?
it's called a prepaid expense.
Yeah.
Good. Prepaid accounts. Now, that means I can only record 3 months. Okay? 3 months as a prepaid expense because one of the month I'm currently using it right now. What about that rent deposit?
Uh, would that be prepaid also?
Is there a better account for that? Now, what does
Petty cash.
what does a deposit do? Is the deposit, are they going to actually use it towards the rent?
No.
No, usually they just require that months ahead of time just because they don't want to figure out what the number is. But this deposit, what happens when you leave the place?
They would use their deposit for any damages that was done to the space.
Correct, right? So this deposit, they just usually they would say, oh, if you want to, I need you to put a down payment or a deposit for 1 month in advance, right? Because again, they don't want to calculate how much that expense is going to be because that money is in for emergencies in case they need to fix the house or for whatever it is. You don't have to pay out of pocket. It already comes out of your deposit. Now, usually, this is typically what should be happening is at the end of your term, right? When you finish your contract, usually you get your deposit back. But most cases, right, especially for landlords, they will find some kind of loophole to not give you your deposit back, right? They'll be like, "Well, you left the house, you left the place a mess. There's a hole in the wall, things like that, right?" They will use that deposit to their means to spend it. But in this case, that's usually what a deposit does it's like a security deposit, right? It's just so that you can secure the home or, secure the location. And it's meant for, minor fixtures along the way that comes when you rent out a place. So in this case, what account would be best for that since it's not technically for rent per se? Because you're not paying in advance for rent. What are you paying? What are you actually making this deposit for? So take a look at your chart of accounts. What would you categorize this rent deposit as?
Deposits.
Deposits. Correct, right? Because it's not really to go towards rent. It's to go towards for any fixtures, right? So in this case, the deposit is simply a deposit. It's not to pay for rent. Unless sometimes if you can't make that rent, then yes, they'll use it for that. But in this case, it's more of a security than it is for paying for rent. Okay, so there you go. We established all of the things that we need, okay? So let's go ahead, and we know that they do exist, right? We got prepaid accounts for $18,600, deposits for $18,700. We're going to use our checking account to pay for the thing, and then we have a rent expense, which is $62,000. Okay. So let's break down my journal real quick. Okay. So the first things first is we need to identify, right? What did I buy? What did I pay landlord properties for? Right? We said rent, right? We're renting out the building. Okay? How much is 1 month's worth of rent? Excuse me.
$1,500.
$1,500. Okay? Right? Then we end up buying 3 months of rent in advance. So we have a prepaid account, right, for those 3 months worth of rent. Now, how much is those 3 months of rent worth?
$4,500.
$4,500, right? If it's $1,500 per month, multiply it by 3, it's going to be $4,500, okay? And then how much is my rent deposit for?
$1,500.
It's for that 1 month's worth of rent, okay? And last but not least, how did I pay for it?
By check.
You wrote a check. And where does the check come out from? Your checking account. So in this case, for a grand total of how much?
$7,500.
For $7,500. Good. Okay? So, first things first is you wrote a check. Okay? How do I know what check number I used? How do I know what check to use?
You would be going to your you go to your check register.
Excellent, right? You would go to your check register. So my check starts at 1501 and we have all the way to 1540, right? We have 40 checks ready available to write. So in this case, what's today's date? Today is the 4th. Or today's the 5th, excuse me. How much did I write this check out for? How much did I write this check out for?
$1,500.
How much did I write for this check out for? I didn't write it for $1,500. I wrote it for
$7,500.
$7,500. Good. Okay. Now, who did I write this check out to?
Landlord's property.
Landlord's properties. So let's go ahead and type that in there. Landlord's properties. Okay. Why did I write this check out to landlord properties? So if you have a means to write a note, go for it. Why did I write a check out to landlord properties?
Because that's the person who you'll be paying the rent to.
Mm-hmm. So I'm going to go ahead and say rental property. Rental, uh, rental, uh, rent for rent. Okay, no, rent for the store.
Mm-hmm.
Okay. So good. I established that I wrote check number 1501. Okay. So then, now that I have that, I should have all the information that I need to finish off my journal. Okay. So this is how I want this. Well, I mean, this is how you should have in your journal, because if I were to go ahead and say, okay, I just paid for rent, does that give me any information in this transaction, such as who I wrote this check out to, or who I paid, and who's my landlord? So in this
Yeah.
case, usually when you have your description here, be as descriptive as possible. Now, I'm not asking you to be writing a whole paragraph because that's unnecessary, right? Pick the most important information that allows you to keep track of this transaction. So the first thing is you should identify who you got the service from, okay? And we got this from Landlord Properties, right? And then second thing is, what is the proof of transaction?
It would be the check that was written.
The check that was written. What else is the proof of transaction? Is there a list of items that I purchased?
It would be the prepaid account.
Okay, so that's for my chart of accounts. Now, what is their proof? What validated that a transaction has happened? What did they give me?
A receipt.
What kind of receipt? Is there a receipt number on here?
No. Would it be
Check number?
Okay, so the check number we already established is proof of a transaction, but what I'm asking here is what is the actual list of items that they charged me? How do I know that when I wrote my check out for $7,500, how do I know what I bought? What's my proof of a transaction? Now, you said it was a receipt. Now, and I said, did they give me a receipt? You said no. So what did they give me instead?
would it be the lease?
Exactly.
Okay.
It would be of course, because this one tells me who gave me the service, right? When did I get the service? When is my service due? What was the item that I bought? How much was every single thing that I bought, right? How much was rent? It was $1,500 per month. How much did I buy? I bought 4 months. What did they charge me? They charged me additional month for deposit. This is your proof of a transaction. And they recorded that you paid with the check number 1501. Okay, so what do I call this? Because it's not a receipt. What is this? You said the lease?
Right.
So what is it?
It's the lease.
Is there a number to it? What?
Contract number.
It's the contract number, right? So then if for any reason this landlord decides to come back at you and say, no, you need to pay for rent, you can come back at them and said, no, I signed a contract right here stating that that I am supposed to be renting this place from June to September. This is 100% your proof of transaction, and this is how, in case for any reason, your vendor, again, has a dispute with you, you can dispute it back with them saying, no, I have it handwritten in the contract. I've signed the agreement. This is what we agreed to. This is my proof of transaction, and this is proof that I paid. This is a powerful tool to help you, fight those, situations where maybe a vendor's treating you, not right, right? They're not giving you the service that they promised to provide you, right? So this is your proof of a transaction. This is your solid proof is that you actually got a contract out of it. And the contract number is 657. 654. Okay. So there you go. That's what you need to have there is proof contract number 123654. Okay, and then of course, you could put details in here that you paid rent. Okay, 4 months rent with rent deposit. And what else? You said the check number 1501, right? It's definitely proof of a transaction. Okay. So now that I've finished my journal here, let's go ahead and plug it into my ledger now. Okay, because I wrote my check already. Okay. So now I can go ahead and plug it into my ledger. Okay, so we just encountered a rent expense. So I'm going to go to my expenses here and locate my rent expense. Here we go, rent expense. And what I'm going to write here for my notes is, this is rent for the month of June. Rent for June. Okay, we are still on the first general journal, and the rent for June was worth $1,500. Okay. Okay. So let's see what's next on the list. I have a prepaid accounts. Okay, so prepaid accounts we have established, right? This is going to be an intangible asset, right? Because can I actually touch rent? Can I physically touch rent? No, I can touch the contract number, but can I actually touch rent? No, right? How do you touch rent? And second thing is that now that you paid in advance, you own that rent for the next 3 months. So that's why we interpret this as an intangible asset, because one, you can't touch it, but you own it. And you own it for a period of time. So we call this, we're going to call this an intangible asset, which is we designate it as a prepaid account. Okay? So here we are, prepaid accounts. Right? What are you going to say? Advance payment. For rent. Okay? How many months did you pay? You paid 3 months. Okay? And it was $1,500 per month. Okay? Still on the first general journal. Now in this case, we said we paid rent, 3 of them for $1,500 a month. So that's a grand total of $4,500 worth of prepaid rent. So in this case, I was very descriptive of what I made this prepaid account for, because I purchased and I paid in advance 3 months worth of rent. Okay. All right. So then down right below it is your deposits. And I'm going to go ahead and right here say rent deposit, right? Because that is exactly what I did. I got a rent deposit. Okay, I'm going to put in parentheses. This is 1 month's rent. We're still on our first journal, and it was worth $1,500. Okay. Okay. So I got 3 out of the 4 transactions done. So last one is I need to go up to my checking account because now I need to say I just wrote a check out for $7,500. So therefore, that is money that's being taken out from my checking account. So how do I figure this number out? Well, in this case, right, we can acknowledge that we wrote a check. Now, for the notes, I am going to simply just put in my check number, okay? Because in this case, I don't need to clutter my ledger with too much detail because if I just use my check number, what do I have the capabilities to do? I can take a look at my check register and it will tell me that I paid, when I paid, how much I paid, who I paid, and why I paid, right, in my check register. So that's all I really need to put in here. It's just my check number because that is good enough resources or information that I can reference in to know exactly what happened, right? I don't need a contract number because in this case, like I mentioned, right, I can just pull up my check number from my check register and I would know everything that I need to know about that transactions, okay? Again, we are still on General Journal page 1. And this time, did I debit or did I credit my checking account? Did I increase or decrease my money?
Decrease.
You decreased with 7,500 with a credit. So by typing in $7,500, that should automatically help you calculate right here that now I went from $23,625 down to $16,125, right? I take my 2023 minus the 7,000 and I get my answer to be 16,000. Okay, so there is a perfect way of how we use the ledger is if I'm adding money, whether I'm making a deposit or whether I am receiving some kind of cash, okay, it should increase my account. But if I need to pay for things, if I need to write a check, then it's going to decrease my checking account. Okay, so now I only have $16,000 in my bank account. Okay, now is that true in terms of real life time?
Ooh.
If I write the check today, is that money going to come out of my bank account right away?
No.
No, because again, especially with checks, they have some kind of holding period, but also it takes time to process, right? You may have gone to the landlord properties place and wrote the check right then and there, but they still have to cash it out. They still have to deposit into their bank, and that can take anywhere from 24 to 48 hours, or usually they always say 2 to 5 business days. Now, especially, when is this day? Well, let's take a look. When is the 5th of June? Let's see. Oh. When is the 5th of June? The 5th of June is on Wednesday. So in this case, it will take about 24 to 48 hours, right? Okay, if it was on the weekend, what would happen? It won't process for another 3 to 5 business days. So in this case, that's exactly what I mean. So in this case, is this reflectant of what really happened? No. But it is a good record for us to keep in mind, so then when we do incur the next expense or when we do spend more money, we have an idea of how much money that we have left in our bank account, right? I have at least $16,000 guaranteed. Okay? All right. So now that I have this, right? Here's what's the next part. I'm going to show you how to use the subsidiary ledger now, because I involved myself with a vendor. Okay? Now remember what the subsidiary ledger does. It keeps track of every person that is involved in your company. So your customers, your vendors, and your employees. So in this case, that's exactly what we're going to be doing. Here is we're going to now go ahead and go into our subsidiary ledger. Okay? Now in this case, it is a vendor. It is going to be in order by alphabet, so alphabetical order. So in this case, landlord properties. Here you go, landlord properties. Now, what's so significant about keeping track of your vendors? What's the purpose of keeping track of your vendors?
So that you'll know who you owe.
Correct, right? It's our means to keep track of if we owe them money or not. But it's also another way for us to keep track of ourselves, right? What did we do to involve ourselves with this vendor, right? What are the payments that are due? What are things that are going to be due in the future, right? So in this case, this is where I'm going to record every single transaction that I deal with a vendor, whether I owe them or not. Because again, what if they tell me, I'm sorry, ma'am, your check number 1501 bounced? What do I have to do? That means I still owe them money, right? So that is the real main reason why it is so important that you keep track of your vendors, because again, not everything in the world is perfect, right? You make a payment, you write a check out to them. What if you didn't have enough money in your checking account? What if that check never cleared? What if they lost the check? Then you still owe them money at the end of the day, right?
Right.
So therefore, that's why it's important that you keep a good track record of every person that you encounter. So in this case, what's my note to my landlord properties? Well, I just rented out 4 months worth of rent, 4 months of rent with rent deposit. Okay? Now, I got to go back. Okay, so 4 months worth of rent. Okay? I'm going to put $1,500 per month. Okay? With rent deposit. And what was my proof of a transaction? I wrote them check number 1501, right?
Right.
Because this way, if I have to go backtrack to where that check is, I can check my checking account. Did it clear? Did I pay my vendor for what I owe them? And if I never see check number 1501 ever clear, I can always call up my landlord and say, hey, where is the check that I gave you? And if they say they lost it, well, then that's on their end. They never came out to come get me. But what if they say, oh, they give you a notice saying, hey, we need to, you can't use this place because you never paid for rent. But you can say, yes, I did. I paid with check number 1501. I never received the payment. I gave it to you right then and there when we signed the contract. Oh, I lost the check. So there's many reasons that you can utilize this to dispute your arguments, especially with these vendors, because again, losing a check is very common. It's very common. Okay. So then again, invoice number, I don't have one, but I do have a contract number, right? So I'm going to go ahead and put contract number 12367 654, right? Post reference is going to be where you have this transaction in your journal. So in this case, I was in my very first journal page. Now in this case, did your landlord give you terms?
It's a month.
Yes and no, because you already made a 4 months in advance payment. So in case, is there any terms when it comes to this kind of contract? They can't bill you next month, can they?
No.
No, but in other sense, in real life terms, right? If you're looking at terms, they should be, if since you made a payment in advance, they should be giving you copies of the receipt, just so then you know that you have that advance payment. Okay.
Uh-huh.
In this case, no terms necessary unless it's on the contract. It's saying when is rent due. In this case, nothing here because, again, we already made 4 months of advance payment. So there's no need for them to keep billing us for any reason. So no discount and no due date. Okay? Now, in this case, right, I have a prepaid amount in this column. Have I ever spoken with this landlord ahead of time? Did they require me to make a deposit or a down payment prior to handing me service?
Yes.
Let's ask that question again. Have I met this landlord before?
No.
No. A prepaid amount is usually when you haven't met the landlord and they're requiring you a down payment in order for them to go ahead and process the service for you. Since I haven't met this landlord at all prior to requesting for the rent, you did not have a prepaid amount here, right? Even though, yes, we did incur that we did pay 3 months in advance, that's not what this column is meant for. This is for in case, let's say, I buy something and they say, I want a down payment before I send out the items to you. Then that is where this column is meant for. It is when you are looking at a vendor and they require a down payment from you before even giving you or providing you any services. They give you a quote and they say, I want a down payment to ensure that you are going to go through with the service. In this case, we went to the landlord properties, we signed a contract, and right then and there, that's when we said, okay, and we paid them. So in this case, there's no need for a prepaid amount for this column, okay? So that means, what was my total invoice amount for? How much was I billed for?
$7,500.
$7,500, correct. Now, okay, so I was billed $7,500, okay? Now, in this case, did I have, any returns or any allowances?
No.
Did I get any discounts?
No.
Did I make a payment?
Yes.
Yes, you did for $7,500, right? You wrote check number 1501 saying that, yes, I made a payment, okay? So how I calculate what the total amount that I owe, because the last column is your accounts payable. Do you owe landlord properties anything?
No.
No. Why? Because your contract said you owe $7,500. You paid the $7,500 with check number 1501. So therefore, you do not owe landlord properties anything. Okay? Now, how I use this formula is going to say, well, I'm going to take my invoice amount, right? And anything that decreases my accounts payable or decreases my bill is going to be any prepayment. So a down payment will decrease your bill, right? If you end up getting a return, right? If you end up getting a discount, and of course, if you end up making a payment. So in this case, we need to take a look at the very first number, which is the invoice amount. How much do you owe, right? A down payment's going to decrease it, a return is going to decrease it, a discount will decrease it, and 100% a payment will decrease it. So therefore, when I run my formula, then it is now 0. Okay? So that formula, once again, is your invoice amount, subtract any prepaid, subtract any returns, subtract any discounts, and subtract any payments. And right now, since I owe $7,500 and I made a payment for $7,500, already right there, I know I don't owe landlord properties anything. Okay? Now, again, as we go through our scenarios, we're going to build upon the concepts and everything is going to slowly start making more sense as we go through every single concept and, every single scenario, right? This is only our first time we're using the subsidiary ledger. So right now, that's all you need to know so far, right? Again, as we go through it, then we'll start introducing to what happens when you need to use a prepaid, what happens when you return some products, what happens when you get a discount, okay? So in this case, right, let's say I didn't make that payment, okay? If I leave that formula alone, right, and let's say I didn't make a payment, that formula is going to automatically calculate saying, hey, you owe landlord properties because you never paid them, okay? Right? Because our contract said we owed $7,500, but because I never paid them, I owe them $7,500, okay? So that's what that formula entails, right? So in this case, I made my payment for $7,500, so therefore, I owe landlord properties nothing, okay? Everybody good so far?
Yes.
Okay. All right. So that is it for this transaction, right? We did the journal, we did the ledger, we wrote our check, and we updated my subsidiary ledger. Okay? So let's go ahead and do the next one, and then we're going to stop here for today. Okay? So the next one, or actually let's see what the next one is, and then we'll go from there. Okay? Next one is we're going to hire Kim Robinson to go ahead and do our interior design consultation. All right? Okay, is this a transaction I need to record?
No.
Good, why?
You're just doing the hiring as right now. So like anything with paperwork as far as like how much he's gonna be paid and what the hours he's gonna be working, that it hasn't been set yet.
Okay, so in this case, we're only hiring Kim to do interior designing consultations. Okay, she's not going to work for us, but she's just hired to do an interior design consultation. Now, what does your store do? What does your store do?
Coffee.
We're selling coffee, so that is exactly why this person is not someone you're going to hire. Because you're just hiring them for an interior design. That's it. You're simply just having them as a contractor, right? And here's the thing, you only hired them. You didn't set how much money you're going to pay them. They haven't billed you yet, etc., etc. So in this case, that's all you did here. So let's see what the next one is. Okay. So then now we decided to go to Computers R Us. Okay. And this is what we did. So we went to Computers R Us on June 5th. right? And we end up purchasing a computer system. We bought a computer, we bought a printer, subtotal was $2,045, and we end up getting taxed for $168.71, and now the total amount due is $2,213.71. And we paid using a check, because it says right here that we wrote check number 1502, and that went through. So let's figure out what we did. What was this transaction at hand? What did I buy?
Computer,
You bought a computer. What else did you buy?
a printer.
Good. So do I actually have a computer and a printer account in here?
Yes.
Yes, you do, right? Your computer is account number 1410, and your printer is 1420. Now, how did you pay?
With a check.
You wrote a check, so therefore you got your checking account. Good. So now let's go ahead and journalize this, right? It's June 5th. Okay, did I increase my fixed assets or did I decrease my fixed assets?
You increase.
We increased it, right? I acquired a computer and I also acquired a printer, and I paid using my checking account. Okay, so 1410, 1420, and 10100. Okay? All right. Now, how much did I pay for my computer? And how much did I pay for my printer?
You paid $16.95 for the computer. And $350 for the printer.
Okay? So let's verify that. Okay? Did I write a check for $2,045?
No.
So what do I do with the tax?
It would be in your tax payable.
Now, am I owing the tax?
No.
No, you're paying the tax. Now, what am I buying? What is a computer and a printer to me?
That's your asset.
It's an asset. Now, if you remember depreciation from chapter 11, what is included in the cost of an asset?
The tax.
The sales tax is included, especially because we went out and we bought it from the store. Can you walk
Right.
away? Can you walk away with a computer and printer without paying tax?
No.
No. So in this case, how am I going to split my tax? It's $168.71. How do I deal with the tax?
It's going to be added in with the asset.
Okay, so how do I do that? How do I split my taxes?
Expense.
It's expense.
No. We already established that this is going to be included in the price of the fixed asset, right?
Right.
So how do I distribute my tax?
Sales tax payable.
We are paying the tax, not owing it. Okay, we're paying my vendor at time of purchase. So remember, we established that it's going to be part of the cost of the asset, right?
Mm-hmm.
So how do I split the tax? Okay. How would you split the tax? Would I split it in half? Do I split it? How would I distribute my tax? How does tax work? How do I get to $168.71?
Okay, so
So think of it as if you were the sales clerk. How would you charge your customers tax?
it would be added into the amount of the
Price of the sale,
Price of sales. So what do you mean by that? Yes, you're going to add it to that, but how do you get this $168?
sales tax rate,
Sales tax rate. What's the sales tax rate? How do you charge sales tax rate?
it's the percentage of the amount.
Correct. So in this case, how do I figure out how much sales tax for each item I purchased?
So it would be the combination of the computer system and the printer times the rate of tax.
Okay, but can I put my printer and my computer together? They're two different fixed assets, aren't they?
Right.
So in this case, I have to split the tax. I can't just say my computer takes all the tax and my printer doesn't get any tax.
So you would just be so you would divide it.
How would you divide it?
It would be 168.71 divided by 2.
Now, is that true? Can you say that my $1,695 computer gets to take away 100 and let's say it's 70. So 35 or I can't do the math right now. $95 goes to my computer and $95 goes to my printer.
no, it's 0.08% on each thing.
It is 0.825% for each item. Excellent. So therefore, I have to prorate my tax because it's not based on how many items I sold. It's based on the price that I sold. So in this case, I need to know how much tax was charged for my computer, and then I need to figure out how much tax was charged for just my printer. So let's go ahead and do that math real quick, okay? So if I were to go ahead and do 1695 times 0.825%, how much tax is going to be for my computer?
139.84.
Okay. What about my printer?
$28.86.
Oh, 80 what?
88.
Okay, well, let's take a look. Let's go ahead and plug that numbers in. So in this case, if I have to add it to my asset, okay. So my computer, let's say right here, right? You said it's 1834.80. And then we have my printer for $378.88. I get a total of $2,213.68. Something's off. Let me redo my calculation. So 1695. Okay, and then my printer was $350. Okay. How come I am off? Okay, so let me extend this out real quick. Oh, sorry. It's supposed to be 84 cents. 1834.84. Now let's take a look. Did I write a check for $2,213.72?
Yes.
What does your receipt say?
$213.71.
How much does the check say? How much? So how much did you calculate in your calculations?
$213.71.
Look at your calculation again. If you have your
I said
computer,
$2,213.71.
okay, look at your calculations again. If you have the computer for 1834.84 and then you have your printer for $370.88, how much is your grand total? What's wrong? What's wrong with this calculation? You have $2,213.72 compared to $2,213.71. What's wrong?
You're over by a penny.
You're over by a penny. So what do you need to do?
So you need to make an adjustment
Yes, you do.
for that penny.
Yes, so in this case, so I extended this out. Now it says right here, right? You have 8375 and then you have 87. Let me extend this out. So you have 8375 and you have 875. So you have 0.5 pennies versus 3/4 of a penny. So which one would you most likely increase?
The printer?
The printer is half a penny. The computer is 3/4 of a penny. 75% of a penny.
So you would do the printer. I mean the computer.
You would do the computer. You would increase the computer. But what about the printer? You would have to round it down. So in this case, you would be looking at 378.87. And then now you get your total right here of $2,213.71. Why is this? In this case, if you were to pay for the printer and the computer separately, then you would have that rounded penny, right? But in this case, because it's not based on what you sell individually, it's based on the grand total sales, right? So in this case, I bought a bunch of stuff and this is what they told me my tax is. Right? So in this case, if I'm splitting them up because I have to, because my computer is not the same thing as my printer. They both have different assets. They both have different lives to them. They both work differently. So I can't treat them as the same thing. So I separate them as part of my office equipment. So I have to separate and I have to file the taxes and I have to look, where do I distribute that penny? In this case, I'm looking at 3/4 of a penny versus half a penny. Okay, so that's where I was talking about split pennies are dangerous because you always seem to want to round up for split pennies. When in this case, that's not true. You should be rounding up the one that is closer to $1 than the one that's lesser than $1. Okay? So in this case, that's exactly what you're going to do. All right? So now that I established everything, all right? I need to go ahead and cut my check now, right? Because I already paid the Computers R Us at time of the sale, right? I went to the store and I paid right then and there with a check, okay? So again, it's June 5th, okay? And we made a check for $2,213.71. Who did I pay?
Computers are as
What for?
$2,213.71.
Right? For what? Why did you go?
I would say computer system for store.
Good. Computer system for store. In this case, I just put for a computer and printer. Okay. This one is subjective, but you can write whatever you want to write. Okay. Good. So now that I have my check written out, it's gone now. I need to now go ahead and finish up my journal because I have every proof of everything that I have here, right? So I purchased my computer from Computers R Us. Okay. What was my proof of a transaction?
The receipt.
The sales receipt number, right? So you have a sales receipt number.
84143.
Okay. And my second one, or my second proof of transaction is I wrote a check. Okay. This should be pretty straightforward because you don't need to write that you wrote a computer system because what did you journalize? You journalized that you got a computer and a printer. You don't need to be redundant in your journal. Okay. In this case, I already know straightforward what this is, right? I bought a computer and I bought a printer. I don't need to put it into my description. Okay. Good. Now, let's go to my ledger. Okay. So under my ledger, I end up purchasing a computer and a printer. Okay. Okay, so in this case, if you notice this, my chart of accounts is designed a specific way. My main accounts are in capital letters and my sub accounts are in lowercase letters. So in this case, I bought office equipment, but more specifically under office equipment, I bought a computer. Okay, so how much did my computer cost me? Well, it started out to be $16.95 plus 8.25% of tax, which was $138.84. Actually, let me see how much it was. It was $139.84 for tax. Okay. We're still on our first page here. So I acquired my computer for a $1,834.84. Okay. Down below, I have my printer. Right? How much did the printer cost me? It cost me $350, okay, plus 8.25% tax, which equaled the $28.87. Okay. We're still on our first general journal page, and that's going to give me a grand total of $378.87. Okay. Right. Last but not least, what did I do? How did I pay for these computer and printer?
In your checking account.
We got to take the money out of my checking account. Now, in this case, this is a store that we purchased that. We gave it our check immediately. So in this case, it actually, they run it through a system. So I don't know if you guys notice this, but if you go to a store and you write a check, they actually run the check through first to make sure that money went through. So in this case, they use some automated transaction. I don't know if you know, when you put the receipt in there, it will like print on it. I don't know if you guys noticed that. Yeah, so if you guys noticed that, that was right there. That's a direct deposit, or a deposit machine that already deposited the money already for them. So in this case, yes, it cleared out pretty much by the end of the day. Okay. So again, you wrote check number 1502. We're still on our first general journal, and we end up writing a check for $2,213.71. So therefore, you should be left with, right, because you started out with $16,000, you should be left with $13,911.29. Okay. All right. So that's your ledger. Okay, we already wrote my check out. Now, what's the last thing that we need to do? In this case, for any reason that our printer decides to, when we plug it in and it's broken, what's your proof of transaction that you had with this vendor?
Your receipt?
Mm-hmm. So in this case, definitely something that you want to record here, even though you paid for it, right?
Mm-hmm.
For any reason you need to return that product back to the store, you could go ahead and do so. Okay? So what did you go to Computers R Us for? You bought a computer for $1834.84 plus a printer for $378.87. And you had proof because you wrote check number 1502. Invoice is going to be your sales receipt number, which in this case was 184. Oh no, 18.
It was 84143.
84143. Thank you. Okay. And post reference, once again, it's going to be the general journal page, right? We had this on our first page. No terms, because we actually paid at time of service, right? We went to the store. So, of course, if you go anywhere into the store, there is no terms, right? So, in this case, right, we didn't make a prepayment ahead of time. We didn't order this online. So, in this case, how much was my receipt number? Or how much was my receipt amount?
$2,213.71.
Good. Okay. Did I make a return?
Not as of yet.
No, not yet. Did I get a discount?
No.
And last but not least, did I make a payment?
You paid the invoice amount.
Yes, you did. You paid using check 1502. So therefore, let's practice that formula once again. You're always going to start on your invoice amount, okay? Anything that decreases your bill is going to be your prepaid accounts, okay? Your returns, okay? Your discounts, and of course, your payments. So in this case, I owe Computers R Us nothing because I paid for whatever the receipt amount was, which was that $2,213.71. And my proof is that I have the check number 1502. Now, for any reason that, again, I need to go ahead and go back to the store and return the product, I have proof with the receipt. Okay? So this is very important for you to know as well, is that of course this is where you need to keep all of your receipts, all of your invoice, all your contract numbers in a file. Yes, very important. Now we live in the digital age, so again, a better way to, in case you do lose that receipt, is take a picture of it, print out a copy of it, scan a copy of it, or make a photocopy of it. Whatever means to keep yourself organized and keeping those receipts together is very important. Yes, all of those things require a lot of extra paperwork, but that's the thing of having a business, is you need to be very, very careful with all your receipts. You can't just throw it in the trash. Okay? And you can't expect your bank statement to be your invoice amount, right? Because what if you had to return your computer after a week because for some reason it keeps freezing every time you load the screen? Then something's wrong with the computer and you need to return it. And how are you going to return it without a proof of receipt? You can't just pull up your checking account, right? So in this case, a receipt's a very powerful thing. I know nowadays we can use an account lookup, but in most cases, especially if you're using this type of payment where you're paying with cash or you're paying with a check, you have no proof of transaction except for your receipt, right? And your bank statement's not going to help you there either. So that's why things, if you use a credit card or a debit card, and everybody nowadays it's with a microchip, you just insert your microchip and it basically saves a transaction list on there. So in this case, that one is where if you're using those type of payment systems, it's much easier to return products because all the stuff that you purchase on that credit card is saved and downloaded into that chip. Right? So, but again, for best practice purposes, best way to do it is if you get a receipt or anything, make a copy of it, take a picture of it, and then put it away in a folder until I believe you can keep up to receipts. They do say that your receipts after 5 years is when you should throw away your receipts, because there's no way that you would be able to backtrack all of that amount. But holding on a receipt is very important, especially for auditing purposes. In case your company gets audited, well, there's your proof of transaction. Right? So again, dealing with a business is very, it's very legitimate, and you should take it very serious, especially when you're dealing with transactions like these. Okay? So now that I've finished my ledger, my general ledger, my subsidiary ledger, and my journal, as was my check and everything, that is it for today. So that means tomorrow we'll go ahead and continue on with with Wednesday. Okay? All right? So any questions in regards to Coffee Cafe?
Okay, will you have this